Thank you very much, Daniel, for a very kind introduction. Distinguished guests, ladies and gentlemen, good morning. I am very actually pleased to be here again, and I'd like to very much congratulate the asset for hosting yet another this bond market summit here in Singapore. For ADB, this event is actually quite important. In your eyes, you may see this as a private sector-led initiative. On my end, this event is actually, in a way, promoted by the Monetary Authority of Singapore. When we get together under the ASEAN Plus 3 process, particularly in the discussion of Asian Bond Market Initiative, the MAS always mention and promote this activity. So for ADB as a secretariat to this ABMI, for us, this is an official event, so I have to come. The Daniel already very rightly brought up very important numbers. Asian bond market has been showing a pretty healthy growth. As he mentioned, it's right now it stands at 8.2 trillion across 9 markets, I believe, which we cover under Asian Bonds Online. I hope many of you know about it. It's a kind of region-wide database of local currency bond market. It covers basically the ASEAN Plus 3 markets, but actually not Plus 3, ASEAN Plus 2, excluding Japan. When we try to measure the size and the growth of the market in terms of volume outstanding, obviously, Japan is an outlier, so it distorts the figure. We don't include Japan. But even excluding Japan, I must say, out of this 8.2 trillion, it's still concentrated in certain countries. Obviously, there's one huge country, which is China. One way to remember this number is actually, now is actually a good time to do so. It's pretty simple. Out of 8.2 trillion, about 60%, little over 60% is China's bond market. And now we have this 60% rule, of course by chance. But China is responsible for 60% of 8.2. And when you look at this figure in terms of government bonds versus corporate bonds, again, it's 60%. 60% is the government bonds, about 40% is corporate bonds. That's, I think, one way to remember general structure of this market. After China, overall composition, if I may go a little further, China is a little over 60%, and Korea is a little over 20%. It means that the other ASEAN markets, by which I mean basically ASEAN 6, original ASEAN 5 plus Vietnam, together they are responsible for less than 20% of that figure. So that's the broad structure of the market. In terms of the balance between or diversity of the market, the Korea and Malaysia are the one which shows a good balance. Particularly in a simple term, if you look at between the government bonds and the corporate bonds, the Korea has a well-balanced market, and followed by Malaysia. In other countries, still government bonds dominate. The China has been one of those dominated by government bonds, but in the recent years, they have had a rather rapid growth of corporate bonds. So they are really anchoring the trend across the ASEAN plus 3 market or ASEAN plus 2 markets. When it comes, one issue that local authorities are paying attention is actually, of course, capital flows into these markets. Capital flows gets reflected into the foreign holding of those bonds. And we are, at ADB, we have been following 4 countries in this regard. We are trying to follow the pattern of foreign capital flows and foreign holding among 4 countries, Indonesia, Korea, Malaysia, and Thailand. Partly because in those countries, firstly, there are sizable markets where foreign investors could come in. And secondly, and perhaps partly because of the first reason, there are statistics about foreign holding. So we could follow. As you may know already, Indonesia has been known for having a significant participation of foreign investors. Now it's reaching like 37%. And the second comes Malaysia, about 32%, which is significant. Some of you who may be following this number may say, oh, we have a different number. Particularly with respect to Malaysia. In some sources, you may see higher number, like 40% or even above. The reason is that the segment of the market that we are looking at and some of the market participants are looking at are slightly different. We are looking at basically long-term bonds segment. When you include, for example, central bank bills, and then see foreign holding. Malaysia's foreign holdings in Malaysian securities are actually quite high. It seems to mean the foreign holding in the central bank bills, Malaysian central bank bills, seems quite high. That I'm not sure if it is a sign of some concern, but that seems a reality. Now I would like to explain a little bit about Asian Bond Market Initiative. In terms of market growth and even some of the regulatory developments, you may notice through Asian Bonds Online and a publication that we make out of it, which is called Asian Bond Monitor. But ABMI, Asian Bond Market Initiative, by itself, it's really much more than that. Now it is built around 4 task forces, led by, of course, the authorities, the governments, and now also participated by central banks. So Ministry of Finance and the central banks of those ASEAN plus 3 have been running this initiative. And those 4 task forces are responsible for, firstly, the supply side of bonds, second, demand, third, regulation, and fourth, market infrastructure. And through those task forces, they are trying to promote both development and integration of the market. The Task Force 1, for example, has established what's called CGIF, the Credit Guarantee and Investment Facility. This has been established as a trust fund of ADB, but it's governed by ASEAN plus 3 countries. Obviously, as the name says, this provides credit guarantee to enable the issuance of the bonds by marginal issuers who would otherwise face, without guarantee, would face difficulty in issuing. it also supports the issuance across national borders. Some high-quality potential issuers are actually constrained by sovereign credit ceiling, for example. It can also facilitate lengthening of the maturity of bonds. So its operation started, and it has issued several guarantees. Hopefully, it will continue. ASEAN Plus 3 is really supporting it to enlarge CGIF. And under Task Force 2, actually, this Asian Bonds Online and the Asian Bond Monitor is very much done under this Task Force 2. But this is, of course, as I said, this task force is for promoting demand. So it's also doing other things. For example, developing the investment vehicle for infrastructure, promotion of infrastructure bonds. The Task Force 3 is now undertaking a very important initiatives. They have established what's called ASEAN Plus 3 Bond Market Forum. And some of you, or possibly many of you, may be a participant in ABMF. This, in my mind, is a very, very, very important initiative in the sense that ABMI itself has been a platform for policy dialogue among authorities. But of course, market development requires participation of market participants. So the ABMF was created as under the ABMI, but now accommodates and actually encourages the participation of the private sector financial institutions. And there, the regulatory authorities, policy authority, regulatory authorities, and the market participants together identify impediments and tackle together those impediments together and try to harmonize the market and hopefully leading to further integration. There are two sub-forums under ABMF. One of the two is trying to create what's called ASEAN Plus 3 multi-currency issuance framework. They are trying to create a common market across the professional segment of corporate bond market. Obviously, this is, when it comes to issuance, standardizing issuance, that's very much about corporate bonds rather than government bonds. We started seeing some light in terms of implementing and actually having issuance in this segment and creating a common, the professional market, which is based on the common standard across member countries. And under Task Force 4, which focuses on market infrastructure, there was another forum established, which is called the Cross-Border Settlement Infrastructure Forum. Now we call it the CSIF. This is led by the central banks and the Central Securities Depository. They are trying to create the infrastructure that supports settlement of bonds when traded across national border. Particularly, I'm talking about those bonds denominated in regions' local currency. If it's dollars, it's much easier. But it's a local currency, this is quite challenging. That actually the participation of central banks in this effort is absolutely critical because they are the ones who can ultimately support the money side of bond trade settlement in local currency. So those are the kind of 4 key initiatives going on under ABMI. Obviously, these efforts are naturally made consistent with separate initiatives by ASEAN. See, ASEAN Plus 3 and ASEAN, of course, are they overlap, but not the same thing, right? The ASEAN has its own initiative with a very strong commitment. I would say with a stronger commitment for integration, which is, of course, ASEAN Economic Community 2015. And financial integration is a part of the agenda of AEC 2015. And as you may know, it's led by two groups of authorities. The one called ASEAN Capital Market Forum, very much led by Securities Commission, Ministry of Finance and Securities Commissions. And the other ASEAN Central Bank Forum, which is of course led by central banks. And they are trying to guide the process of ASEAN financial integration. But again, the financial integration must be participated by private sector. What the authority can do is to create enabling framework for integration, eliminate the impediments, at the same time controlling some risks. But unless private sector participates and actually trade across the border or move across the border, the integration will not happen. It would end only with a framework. So the private sector role and participation is absolutely critical. When I step back and cast sort of a development light to this, you can also see some interesting dimension. This integration is always a very, very challenging task. Personally, I have had a privilege of being involved in this bond market or domestic financial market development in several countries in the region and beyond. Each time it was very challenging. But when it comes to a regional, trying to collectively develop markets and then integrate, the challenge is significantly greater. Partly because in case of a domestic effort, there's not much political and diplomatic challenge. It's more of a technical challenge. But when it comes to regional integration, there's some diplomatic element and diplomatic political element and some macro-prudential elements, as well as technical, significant additional technical challenges. Let me pick some example. The case of, let's say, so-called frontier market. Frontier markets, we are basically talking about a market of countries with a modest income. They are typically eligible for what we call so-called concessional resources made available by bilateral donors or multilaterals like us. ADB provides what's called the Asia Development Fund, ADF. The World Bank provides IDA. Those concessional resources, of course, it's cheap in cost. Governments of those countries, they of course try to minimize the cost of public sector financing. And to do so, they are inclined to make good use of those concessional resources. It means that they are not as well motivated to develop the domestic market and tap it. Because even though multilaterals or bilateral, even bilaterals provide funding in dollar or foreign currency, the cost, the nominal cost looks quite low. On the other hand, once they develop and tap domestic market, even though it is in the local currency, they still have to pay market rate of interest. So the countries which are very cost conscious, they tend to rely on those concessional resources. So there are some group of countries with modest income, they don't have the same level of motivation. Another case, which is a quite different one, in other challenge of integration, the countries could see some benefit, collectively see a benefit of having some regional hub for trading or settlement or bonds. But when it comes to physically developing and locating it, it's very difficult to agree on where to locate it, which country. So one of the lessons we learned, and all ASEAN Plus we probably have learned, is don't try to do what's politically and diplomatically impossible, even if it may make sense in terms of collective benefit. You may call this a market failure, but that's a political and diplomatic reality we have to live in. The financial market integration is so, therefore, it's a very ambitious and challenging task. I would also like to kind of hit at this capital flow issues. As I mentioned, Indonesia has been receiving a quite significant capital inflows. But it's not only Indonesia, Malaysia also, and Thailand, Korea were also concerned. I think there are tendencies when they see it, when you have impediments for cross-border inflows, whether it is by tax or regulations, it may be convenient, because as long as you have it, you could put some sands into the gear and slow the inflow. Of course, the authority should not confuse impediments on one hand and control the other. Having impediments doesn't mean that the authority has a control. Authority should enhance the control of these capital flows instead of leaving impediments there. But if it takes time to develop or enhance control, for the time being, impediments could look convenient. So those are the kind of factors that could delay some of the effort. And on top of it, of course, they have seen great difficulties experienced by Eurozone. So all those makes the authorities quite cautious. And I think it's a quite right thing. In that regard, I very much admire the effort and achievements made by ASEAN and ASEAN Plus 3. Going forward, I think there are even some global regulatory initiatives which can interact with all these efforts. For example, Basel III. The Basel III came up with a liquidity coverage ratio, and that require high-quality liquid assets. And high-quality liquid assets, there has been quite a debate over this HQLA, and it is classified into, I think, 3 categories: level 1, level 2A, and level 2B. And corporate bonds can qualify for level 2A and level 2B. But I'm sure you are quite familiar with this regulation. If you look into these details, it's clearly favoring very high quality corporate bonds. Banks would be encouraged to hold mostly, if not only, very high quality corporate bonds, in particular, in terms of rating. It's BB minus or above. So what do we do with BBB minus and above, but below single A plus? It's still a pretty good investment grade bonds, but how these rules will impact on the demand for corporate bonds in coming years, it remains to be seen, but something that I think we should keep our eyes on. The ASEAN Plus 3 is already tackling even those possible interaction with the global initiatives. And ADB is very much committed to continue to support these initiatives. But as I said, in order to achieve true market integration, the participation and support of private sector is absolutely essential. That is the true, only private sector participation can they achieve the true market integration. And I trust many participants here today very much prepared to work with the authority in this challenge. And through today's event, I very much look forward to further discussion of those issues. Thank you very much.